Hello, everybody. Welcome again to the 15th episode. Wow, this is really building up. 15th episode of Scale Up Podcast. This is Dan Eisenberg. And as usual, I'm really excited to be with all of you again, bringing you what I think is a unique portfolio of contents around how you grow companies. Again, Scale Up Podcast isn't for startups. Your startups are welcome to listen and I think you should, because listening to Scale Up podcasts will give you an image in your mind of what it's like to be a company that's maybe 10 times, 100 times bigger than you are today when you're just starting. And for companies that are actually in there growing, I think the content on Scale Up podcast just gives you ideas. Anyway, that's enough. Let's jump in. I'm here with Joey Chung, who's in Taiwan. Just say hi, Joey, so we can hear your voice.
Hi everyone. Hi Dan. Thanks for having me.
And I've known Joey for probably 15 years or so. He was at the Harvard Business School when I was teaching there. Disclosure, I did invest, I did invest in his company way back when. I'm going to edit that out. I did invest in his company early on, but the company is public, so I am technically not an investor anymore. The News Lens Media Group, TNMG, which is the NASDAQ ticker, is a really fascinating group of assets, I might say, but I'll let Joey speak for himself. Joey, before getting into TNMG or the News Lens Media Group, could you tell us a little bit about who is Joey Chung, and don't say anything at all about the business?
Sure. Okay. Very quickly. So I spent before this exactly half my career in the U.S., half my career and personal life as well. I guess in Asia. My family's Taiwanese. I went to the U.S. when I was 2. Interestingly, I spent most of my time actually growing up in Louisiana, Mississippi, and then Michigan. My parents were there for their usual master's degree, PhD, and then postdoc and everything. So we moved every time they graduated. But not your usual typical, I guess, U.S. cities in that sense. Deep South.
And I think most people who live in the United States, Americans, don't know what that part of the United States is like. You probably know a lot more than they do, or we do.
Yeah. I always joke I got the most extreme, U.S. experience and the most extreme Asian or Taiwan experience as well later. But even at HBS, I think one of our classmates told me that they couldn't find anyone, more Southerner, I guess, than me in terms of your card growing up, where you grew up. So yeah, from 2 to 5, I was in Louisiana. From 5 to 10, I was in Mississippi, and then my dad that did his postdoc at University of Michigan. So I was in Ann Arbor for a year or 2. And then really suddenly, my family moved back to Taiwan, which is a huge shock to me. I had never been back to Taiwan ever since I left when I was 2. I couldn't really speak Chinese. I definitely couldn't read and write. So it was a huge shock to me. It was, like moving to leaving the US for the first time in my life. So anyway, did middle school, high school, and interestingly, college in Taiwan as well, before I went back to the US. So that's, where I met Dan. But HBS after college in Taiwan. So at that point, exactly half in Taiwan, half in the US, and interned for Polo Ralph Lauren in New York as my MBA summer internship, which is a lot of fun. But the most American of retail and luxury branding. So that was a very interesting experience. I was going to do consulting after HBS. I had an offer to maybe do that in Hong Kong, since I went to HBS relatively young, basically almost straight out of college. So compared to most of my classmates, less work experience, less exposure. I thought consulting made a lot of sense to kind of, get that up there in terms of work experience as fast as possible. But interestingly, kind of out of nowhere, I met and got hired by my future boss, which was a HBS class of '08, so a year ahead of me. So there's this Japanese guy, classmate, that was hired after HBS to be the COO of Sanrio. Sanrio is the Japanese media company that owns Hello Kitty.
Right.
So I met him. He gave me another few weeks of summer internship, and afterwards gave me a full-time offer to join Sanrio out of the U.S. offices in San Francisco. So I did a year in San Francisco. It was kind of like the internal BD/consultant, wherever they needed an MBA student to do the analytics, projections, turnaround situations, et cetera, et cetera. I did a year in San Francisco, a year in LA. And then they asked me if I wanted to move to China to take over the Sanrio China office based in
It
Shanghai.
became really a big business, I think, right? Sanrio in China.
Yeah, yeah. Very different than, of course, the U.S., where it's a mature market with a lot of retail stores. In China, it's up and coming, still fast growing, but of course, a lot of IP, piracy issues, market complexity there. But you can kind of see a pattern already. So, grew up in the South, grew up in Michigan, went to school in Boston, summer interned in New York, and then worked in San Francisco, worked in L.A. So, almost every major coast, major side, and then Shanghai.
Let's jump forward because you have a young family as well, right?
Yeah, yeah. Two kids, one 3-ish, one 6 months.
So let's now talk about the News Lens. By the way, I have a little trouble just with the name because I invested in the News Lens. It merged with Mediagene in Japan, so it's TNMG. How would you like me to call the company? Is it the News Lens or is it News Lens Media Group, which is a mouthful?
Yeah, no, I think right now just TNL Mediagene or TNMG is fine. The ticker,
Yeah,
is
let's use TNMG. So just tell us what is TNMG, and leave the numbers aside because I want to ask you just to tell the story in the numbers later. But just what is it? It's a fairly it's a little bit confusing to the person who sort of zooms in from the outside and looks at it. And as you describe it, or first of all, the concept of it, what is it like? Is it like anything else out there that we can sort of hook it to in our minds?
Sure. So I think in a sentence, we set out to build the largest pan-Asia, multi-language, multi-market, independent, high-quality media, no political bias, no corporate agenda. That was the original ideal. But also gradually, as we evolved and did M&A, to also encompass the entire digital ecosystem. So data analytics, AI/CDP services, e-commerce, events, studio, the whole 9 yards. So we want to build out the largest, basically pan-Asia tech, media, data, AI, and e-commerce group.
But staying away from China per se. Is that
Yeah, well, directly and indirectly, I mean, all media companies are mostly banned and blocked in China anyway. So we were blocked by our second or third year. So yeah, we're like everyone else, we're blocked in China.
so? You didn't even try to go to China per se, and if I remember correctly, part of your value proposition is the neutrality, political neutrality, or outside view of China, so that you can speak your mind, so to speak, freely. Is that a fair statement?
Yeah, yeah. So a lot of the different media companies in Asia are very, very political. My joke to the Americans when I'm explaining this is just imagine almost every single TV, newspaper, magazine, digital media website is basically different variations of Fox News almost. They're all very political, very left, very right, very, anti this, anti that. So the original ideal was we wanted to be as objective and basically only newsworthy content with no political agenda or corporate agenda. That was the original ideal. So that grew very quickly through Taiwan and then Hong Kong over the past 10 years. And then we're, as you mentioned, the result of a merger with the largest Japanese digital media group. They're much older than we are. We're about 11 years old. They're about 26 years old now. So that hence the TNMG. So the media gene comes from our Japanese side of the family, and the TNL, that's the original Taiwan side of the family.
Why did you merge?
Well, so we've done rapid acquisitions, starting about 5 or 6 years ago. We've done a total of 10 acquisitions over the past 5 or 6 years. So on average, 2 every year. The short answer to that is simply because, Taiwan is too small. Hong Kong is too small. Many of the Southeast Asian countries are too small. So at a certain scale, if you're only doing, serious, objective news, there's only so much you can go before you kind of max out in Taiwan or max out within Hong Kong. So there's two ways you can get about this. One is to grow internationally, which we've been doing. We have a Hong Kong edition, a Taiwan edition, a Southeast Asia edition, a Japanese edition, an English edition. And the second thing is to start acquiring basically vertically. So over the past 10 years, we kind of naturally evolved from one media brand to being a large media group. And then after a certain scale, we started acquiring tech, data, AI, and e-commerce companies for the different diversification of our products. So the short answer is basically no choice.
Scale. It was scale. Just
You have to scale.
scale.
Yeah.
So I guess that raises a lot of interesting questions. Anyway, to me, is what's it like for a Chinese, or I'd say Taiwanese specifically, and Japanese company to merge from a cultural perspective? When I say cultural, I mean business culture as well as culture, language, everything. Can you just say a few words about that?
Yeah. So my, I guess, analogy every time is any M&A at a certain scale is very like a marriage, much like a marriage. Their investors become your in-laws in many ways. And we were lucky in the sense that the Japanese merger was our 10th deal. So we've done it 9 times already. So it's not like we're inexperienced, but yeah, it was our first major cross-border deal. And so just like any marriage, respect the other party, respect their family, respect their traditions and their culture. And the idea is everyone comes together for the next milestone and the next step. And so, for example, if we're doing our jobs correctly, maybe this time next year, we would have had 1 or 2 Southeast Asian acquisitions already, anyone from Singapore or someone from Indonesia, for example. So it truly becomes a transparent, almost like immigrant organization, if you will. So yeah, I think the short answer is treat like a marriage. This is a long-term deal. You're going to see each other every day. So
Did some of the leadership of Mediagene from Japan join the leadership team of the News Lens, or the reconstituted merged asset?
Oh, absolutely. So out of the 10 acquisitions, every single one of the founders are still within the group. And all of our second tier, first tier, or C-level managers, more than 50% of them are actually the founders that we acquired.
How do you pull that off? I mean, that's
Uh,
a real cultural melting pot.
Yeah, so you have to be very, very transparent and very, very respectful. But at the same time, for example, if we acquire someone of which their CTO founder is actually better than our original CTO, then their CTO actually goes up. So it truly becomes that kind of fluid, like I said, immigrant organization melting pot where since we typically acquire companies of which we're missing, if we're missing this media vertical, or if we're missing, data analytics, or missing e-commerce, that head or that founder becomes the e-commerce head for the entire group. So once you have this, I guess, this atmosphere or this culture where it's based on whoever's actually better at what, we were missing, it truly becomes a melting pot. But at the same time, you have to be very, very respectful towards the other company's history and cultural stuff. Yeah.
So there's another aspect to that, and that's the purely physical aspect of how do you work together, given the fact that these executive leaders are, at least to some extent, distributed physically. So how does that work?
Yeah. So in Taipei, for example, we have 3 offices. For all the other smaller deals, we just move them to our office. So, you share overhead, you share rent, you share, legal, HR, accounting. So their costs immediately go down. So for the smaller deals, if it's like, 100 people versus 10 people, or, we had 200 people versus 20 people, that's actually relatively easy. Yeah. It's the bigger deals when you're doing 70 people, 100 people, that's challenging. And it took us 3 years to gradually merge all the offices into one, especially during COVID. So yeah, that's challenging, number one. And it's also challenging, number two, if your original DNA was media, and if you're buying a smaller media company, that's actually relatively easy. But if you're buying an AI company or an engineering team or a sales team, that's hard, because the DNA is completely different. The motivation, the bonus structure is completely different from a media company. That takes a few years to gradually merge. And I would say our overarching takeaway is you merge the ones that help people make money more faster. You don't touch
Employees make money, or the company make money?
both, but ideally you make them feel like, they're joining a bigger family, so their bonuses increase, their playground increases. You make them feel the benefits first.
Personal opportunity, the personal opportunity.
Ideally, you don't go in and cut 20% of the headcount on day one. You make them feel the upside first. Yeah, with the Japanese side, definitely much more challenging because, you have 250 people in Tokyo and Kyoto, and you have 300 people in Taipei. So the org chart is fully integrated. So exact same idea. For example, their finance team is much more experienced than ours, 25 years versus 11 years. So the entire finance team is actually fully integrated and reports to the Japan side. On the flip side, the AI engineering team is much more developed on the Taiwan side. So the entire engineering team is integrated and reports to the Taiwan CTO. So again, it's that same logic. And the agreement I had with the Japanese co-founder is we will try to meet each other basically every 45 days. I will go to Tokyo every 2 months, and she will come to Taipei every quarter. So and we basically talk to each other almost every single day. This is very much like a marriage. So what you wouldn't do to your husband or wife, publicly, you wouldn't do to your co-founder as well.
Yeah, and the language is English?
It's all English. So we were fortunate in that, even when we were a startup in Taiwan, either my own background or the co-founders or the engineers or the managers that we hired, the supermajority could speak relatively fluent English. Our earliest seed, Series A, Series B investors were mostly American. So even internally, all the documentation, the PowerPoints were all in English to begin with. So that was relatively okay. We were fortunate in that the Japanese co-founding team and the founder actually went to grad school in the UK. So compared to many of the Japanese teams that didn't speak English, they could actually relatively speak English. And now, yeah, all documentation and the PowerPoints are now in English. And with ChatGPT and AI translation now, even the ones that can't speak English can actually relatively quickly see all the immediate translations in real time.
I want to get into a little bit into the business model in a few minutes, but let's back up or zoom out for just a second. And if you could just take 1 minute to tell the story of, not the history, give us a snapshot of TNMG just by the numbers.
Right now, right?
Right now. What's
Yeah. Sure. So yeah, we have 5 offices, staff count about 500 people. Revenue last year was close to 50 million. We now own 25 different media brands across, serious news, finance, business, lifestyle, gadget, movies, fashion, basically almost all of your content verticals across Japanese, Chinese, and some Cantonese and some English. 40 to 50 million readers on average on a monthly basis, close to 200 million page views. And yeah, I would say
growth rate?
Yeah, last year over year was about 30 to 40%. And of that 30 to 40%, roughly every year on average, half of that is organic, and the other half is the aforementioned 1 or 2 acquisitions every year. And that will probably continue for the next 3 to 5 years.
That's crazy. Is there any organization out there, let's say in the quote unquote West, that is a model or similar to TNMG, or is this something that's going to be completely unique?
Well, I don't know about completely unique, but in terms of comparables, sure, there are a lot of similar companies in, the digital media space, of course, a lot of similar companies in the MarTech, AI, e-commerce. But I think to answer your question, what makes us a little bit special is that we're one of the very few that we like to joke evolved and integrated from the left side as a media company all the way to the right side. So that entire digital service supply chain where you own the media, therefore you own the content, you own the zero party, first party, and third party data source. But at the same time, all the monetization products, the mobile ad tech, the data analytics, the e-commerce, events, digital studio, everything that makes money on the right side, we also own in-house. So I guess what makes us unique is we're one of the very few, if not only pan-Asian or even, internationally, that actually owns the media but owns the tech and data products to monetize the media all in-house as well. I think that's what makes it special.
Well, it sounds like this asset called TNMG could be extraordinarily valuable someday. Right now, it seems to be undervalued in the stock market. I guess part of that is a purely technical issue with your debt structure. We don't have to go into the technicalities of that, but I'm just curious whether you agree that, do you think that this could be a huge asset someday on a global scale, like I don't want to, like a Fox News or a Fox Media Group, again, without the political bias.
Well, yeah, I hope so. Yeah, I mean, right now, immediately in the next year or two, we're way undervalued because of this kind of artificial debt structure that we're trying to solve, and hopefully that will get us immediately, many times higher in terms of where it actually should be. But yeah, going forward, I would say just Asia for now is the perfect market for this kind of consolidation.
Why?
You have a lot of, places that are perfect for the next M&A, for the next target. You kind of copy and paste our current business model, and that can almost double or triple arbitrage in terms of a relatively smaller Southeast Asia company or AI team, cheaper, but their ARPU is lower, that are able to pick up, and immediately we send our existing tech, data, or AI products for them to increase their ARPU, increase their margins, increase their AI products, and again, reflected on a NASDAQ or public markets international valuation. So there's a lot of double or triple arbitrage that we can do as we copy and paste across Asia.
It's almost like what you use the word arbitrage. In my mind, it's like synergy, that you can actually use some asset in one part of the TNMG world to increase the value of an asset in the other part of the TNMG world.
Yeah,
How
exactly so.
how is technology impacting you? If I think about AI and I think about content and technology, you're in the content, you're in technology, you're in services, you're in programs. I think it's kind of a no-brainer that AI is going to change what you do, but say a little bit, something a little more sophisticated than that about where AI fits in.
Yeah, I'm sure if you talk to the engineers, for example, they're very excited about AI. If you talk to the editors, for example, they're very nervous and nauseous about the upcoming AI wave. So it depends on who you talk to. Just like any new technology, 50% of that it brings a lot of opportunity. The other 50% it brings a lot of risk and disruption. So very much so, I would say within the media realm, oh, everyone is very, very nervous about AI. Because once you start adapting AI, you can save time, save expenses. Of course, the next order typically from the top comes down and says, "Oh, great, then let's lay off 20% of your editors or your content people. You don't actually need so many translators." I think the best example of this is, yeah, 5 years ago, if you wanted to have translation of content or content pollination between Japanese to Chinese or English, you need to have an army of Japanese to Chinese, Chinese to Japanese, English to Chinese people sitting in your office every day just translating stuff. Now it's almost completely gone. We already have a lot of automatic translation, and the local editors simply check, what the AI translates, and that saves you like 99% of the time. So something like this, great opportunity, but also a great risk for this industry as well.
What happens to the people that this displaces?
Well, I think twofold. Ideally, you would find them other things to do. For example, more sophisticated content, video content, podcasts, for example, that can't be replaced by AI, at least so far. Or you change them into like more monetization products, so they're able to monetize on this content and AI trend much faster. But yeah, I think that's what everyone's kind of scared about. You've been reading over the past 6 months to a year where all the major global media companies, after adapting AI, a few months later immediately announces 20% in a headcount reduction in content people. It's always the content people first because AI kind of replaces them. So where that is going, I think is everyone's guess, at least for the near term.
Is there anything you can do to get ready for that, or is this sort of experiment, experiment, experiment?
Oh, well, I mean, hopefully we're already doing it. I mean, we have these KPIs where we're forcing however much percent of the staff needs to be using AI already. So that's already being done. The editorial team is you're already using AI for content, A/B testing, headline testing, translation, video production. That's also being done. The sales team and of course engineering team is already using AI for automated, advertising templates, automated data analytics, automated recommendation engines, automated CMS content management systems. So all that is already being done. But is it fast enough, and how does that impact, your traffic? Google just announced, of course, over the past year, AI summaries. So almost every media company that we know of is seeing a drop in their SEO, a drop in their page views. How does that disrupt the future of content creators? Is kind of everyone's guess. So I think it's happening faster and faster and more chaotic. I think a recent term that I just heard that for publishers or content creators, Google was your friend for the past 10, 20 years. it drove traffic towards you of what you were able to monetize. Starting last year, and now that AI summaries are coming out, Google is no longer your friend. Google is trying to replace you because it no longer drives traffic to you. It will simply replace you in terms of the final stop for the average reader. So yeah, it's kind of hard to say where this is going.
Um, I guess I would summarize TNMG in this conversation with the word complexity. But I think it's not just complexity. It's complexity that, as you say, is both a huge opportunity and a huge challenge at the same time. I guess those things always go together. Can I ask you the last question? Because I kind of promised my listeners that they can turn on this podcast, start this podcast, get in their car, go to their supermarket, and finish it by the time they're home. So the last question is, Joey, if you met your younger self, 10 years younger self today, who wanted to start something, let's say like TNMG, what advice would you give your younger self?
Well, the company's 11 years old, so we basically almost started 10 or 11 years ago. Um, it's a much harder, much longer journey than someone can imagine when you first start it. So I was 30 years old exactly when I started the company. It's very difficult for someone, late 20s, just about to turn 30, to think, oh, this is going to be your life for the next 10, 11, 12 years. It's going to go through the ups and downs. It's going to, on the bright side, it's going to make you tougher than you ever imagined. But on the flip side, there are days where it's much tougher than you could ever imagine. So yeah, I think half and half. You will definitely not be able to imagine this 10 years ago. And there's no way to actually know until you've gone through that entire journey yourself. So yeah, it's hard to imagine, but if you truly think this is what you want to do for the next 10, 20 years, the only way to know the answer is just to leap, I guess.
So, well, that's, I guess, um, do you think that as a result, you would convince your younger self not to embark on this journey, but to stay in consulting, let's say?
No, I think when I look back at all these, meaningful experiences, all the grown up moments, all the moments that make you tougher. Yeah, I think it's like my analogy again is like I would imagine is like asking a young parent or a parent when your kids are acting up or when they're in their teenage years and they're driving you crazy and you want to strangle them, and you ask any parent, "Oh, do you wish you didn't have kids?" I would imagine it's probably similar. It's like, no, it was part of the life experience, right? It makes you tougher. It makes you see the world through different lenses. And there are good days and bad days, but you wouldn't trade this for anything in the world. I would imagine it's the same thing.
Well, it's good that you feel that way, and we look forward to watching TNMG as it evolves, and I'm sure it's going to be a fascinating and extremely successful story eventually, and I'm looking forward to watching this as it unfolds. Thank you very much, Joey Chung, the CEO and co-founder of TNMG. Joey, thank you very much for joining us.
Thank you, Dan.
It's late evening in Taiwan right now. I'm sure you want to spend time with your young kids and experience the trials and tribulations of being a young parent. But I can testify that there are many more tribulations and trials.
I'm sure.
Thank you very much, Joey. And again, let me remind everybody, this is Scale Up Podcast. This is, I do this for free. I do this because I enjoy it. I do it because I think it's valuable. I do it because I think it's unique. I think there's content here that you can't get anywhere else, certainly not in the concentrated form that you get it in Scale Up Podcast. So I invite you to be with me on this journey. And if you like it, like it. And if you want to share it with some friends and even not friends, please do so. Thank you very much, everybody.
Thank you.